Let's get across the crypto markets now, which are also surging. Joe Shu from Crypto Consulting Institute joining me. Joe, great to see you as always. So signs of Bitcoin being very bullish again, potentially an all-time high in sight.
Yeah, I guess it's the nature of this market. I think it was last time that we spoke, the market had gone through a minor pullback, and there's the uncertainty, the fear, the doubt, the panic. And I just wanted to re-instill the point that this market is volatile. It is still a very low market cap, but I think people are incredibly sensitive to any price movements upwards or downwards. So whilst the price does start to increase, whilst we do start to attack the 120K, 125K USD mark that we expect and anticipate is coming over the next month or potentially three, as the global situation continues to improve, I just want investors to remain very level-headed and not start to do drastic things like sell, I don't know, all their stock portfolio and dump it all into crypto. Or I've heard of people remortgaging their houses back in 2017, the first mania that happened. It's really important that we stay grounded, we stay level-headed, and we approach the market in a systematic and strategic way, which is obviously what we teach at CCI.
Yeah, I mean, I think anybody selling anything to put into one asset signals red flags, doesn't it? But when you've got this bullish momentum, is it lifting all the other coins as well, Joe?
To an extent. So I was doing a bit of research before. So a couple of points to note. We have an altcoin index, and that analyzes the performance against Bitcoin over certain periods of time. So what we have is the 200 cryptos by market cap, so the top 200 cryptos there are by market cap. And we assess their performance over 90 days, over 30 days, and the current day value. So over the last 90 days, the average has been 15%, so 30 of the 200 have outperformed Bitcoin. In the last 30 days, 19%, which is 38 of the 200 have outperformed Bitcoin, and current value is 22, so 44 of the 200 have outperformed Bitcoin in the last day. So it does help to instill more confidence and certainty. But what can also happen is Bitcoin it does and can suck liquidity out of the market. And then once it makes this strong move, then it can consolidate. And then that's typically when the rest of the altcoins move. But the best thing to watch is, instead of watching, let's say, Ethereum versus USDT as a pair in something like TradingView, you can watch Ethereum's performance against Bitcoin, or Solana's performance against Bitcoin, Sui's performance against Bitcoin. And in there, you're actually able to identify which ones are outperforming Bitcoin or not. And that is where we spend most of our time analyzing. And that's the strategy that we have, certainly for this bull market, given that Bitcoin has been the strongest performer, or certainly one of, for an extended period of time now. So it's only worthwhile rotating and taking on more risk in altcoins if it's actually outperforming Bitcoin. And this is where I think a lot of investors have been caught off guard, where they've held more speculative assets outside of the top 10, top 20 by market cap. They've ridden it down 50, 60, 70, 80%, and now it's finally starting to re-emerge. But I think the lower risk approach is to wait until it really takes out the key level of the 200-day moving average against Bitcoin, or it breaks the downtrend structure that most of them are still sitting in. So I call it turning the dial of risk. So you're 100% allocated in Bitcoin as an example, and then some start to break out. Okay, I'll allocate 5% now, and then when it breaks this next key structural level, I'll rotate another 5%, so I have 10% in this holding. And that's how you can transition gracefully through this bull market, so you don't get kind of slapped around the face, taking on too much risk too soon, and Bitcoin continues to wipe all the altcoins out. So
yeah.
Hopefully that helps.
Joe, I just wanted to ask you something about momentum, because I was just talking to a previous guest about the momentum in Australia's largest banking stock, CBA, which analysts have said for a very long time, sell, it's not worth where it is, but it continues to defy the naysayers. This sort of seems to be the same with Bitcoin. And I note that BlackRock, which as we know is the world's biggest asset manager, they're seeing their Bitcoin ETF now generating more revenue than their signature tracker of the S&P S&P 500 index. Does that mean people are finally playing catch up to what people like you have been saying for a long time, that we can't ignore Bitcoin?
Yeah, absolutely. I think we have to understand that crypto is still a very new asset class, and it's only really matured since the ETFs and since Trump has obviously put his standpoint on crypto. So I think that transition for larger institutions and family offices, etc., it takes a while for them to go through that transition of thinking into a new monetary or financial system, you might say, or a store of value. Let's keep it easy. It's a different store of value for people. So I think if you have been investing in property with great success, you've been investing in stocks with great success for decades, multiple decades now, you might not necessarily want to be as warm to a new asset class. But I think people are now starting to see, number one, data doesn't lie. It's the highest performing asset class in history and continues to be year on year against any other asset class by 4 or 5x over the S&P 500, which was one of the strongest performers alongside that over the past 5 years from some analysis that we did recently. But outside of the momentum comment, I think that when the momentum's in, people really double down and pay attention. So I think that momentum, you buy momentum, and that's what people often don't do in cryptocurrency. There are altcoins that are strong and they're outperforming all the other altcoins, but people are still looking for altcoins that haven't moved yet, and this could move and this might happen. Well, but this is happening, and I'd rather be on the momentum train than the this could move train. Until it does, I don't care.
Yeah, exactly. And so then what is the next litmus test, Joe? You might say people might take a little bit of caution ahead of the July 4 public holiday tonight in terms of assets, but what happens next when we're looking at further regulation as well globally?
I think the regulation commentary has been something that's been happening for a long time. I remember I used to go to the blockchain center down in Melbourne back in 2016, 2017, and it was one of the key talking topics around what happens when institutions pile in, what happens when the governments look at this, and what's going to happen from a regulatory point of view. Do they stifle cryptocurrency or does it enable it? And I think God bless America with Donald Trump. He's taken a very positive stance on it, and the team around him also have a similar vision. So I think regulation is really important, especially in areas like decentralized finance. DeFi, in simple terms, is a way of lending your money out into liquidity pools or staking it, etc. The same as the bank does effectively. You put your money in the bank, they have fractional reserve lending, which is a bit more extreme. But they lend that money out, they're able to make money on it. And that's what DeFi, the DeFi space is. You have money, you put it in the bank, they lend it out, they give you a return percentage interest effectively on your loan to them, you might say. I think spaces like that need more regulation, even though lending is one of the highest performing areas over the last year, almost outperforming every other sector. So the traditional finance area is integrating now more so into crypto than we've ever seen before. And this is where I see the mass opportunity and the mass transition happening. But there is still a great need for regulation. And I think that will give more confidence to those traditional investors that can say, well, I can put it in a bank and it's guaranteed. Well, it's not guaranteed. And hopefully people know what a bank bail-in is watching this. But there's more regulation and comfort for those investors, where in the crypto arena there's still uncertainty, especially after what happened with Celsius and BlockFi, the centralized finance companies that imploded after FTX. So I think regulation's good. It's protection for investors. If you put too much regulation in, it stifles innovation and growth. But I do think the US is the world leader on this, and a lot of people are now following. Australia is well, I spoke at the DECA event recently, and I think there is positive things happening, but I also think there's a lot of challenges and limitations and slow to move, which is a real shame, because I think as a small country, we should be a lot more agile. And it should be a case of, okay, we've got this opportunity to be a world leader, let's take it. But I think the anchors of the traditional mindset are still firmly in place, and we need a bit of a shake-up at the top for this innovation to continue to expand and grow, which is clearly here to stay.